Today, we're diving into the world of bonds. What exactly are they? Are they risky? And should you invest in them? By the end of this video, you'll have a solid understanding of bonds and how to start investing in them. So let's get into it. So what are bonds? Essentially, a bond is a loan that you, the investor, give to a government, corporation, or organization in exchange for regular interest payments, plus the return of the loaned amount when the bond matures. It's like lending your money with the expectation of getting it back with a little extra. Bonds are considered a fixed income investment because they provide regular interest, also called coupons. Now let's talk about the different types of bonds you can invest in. 1. Government bonds. These are issued by governments. In the US, for example, you have treasury bonds. These are often seen as lower risk because governments are generally reliable when it comes to paying debts. 2. Corporate bonds. These are issued by companies to raise capital. They tend to offer higher interest rates than government bonds, but they also come with more risk, since companies can default. 3. Municipal bonds. These are issued by local governments to fund public projects. One big advantage is that they can be tax exempt. 4. High yield or junk bonds. These bonds come from companies with lower credit ratings, meaning they're riskier, but they offer much higher returns to compensate for that risk. You might be wondering, are bonds risky? The short answer is, it depends. Generally, bonds are considered less risky than stocks because you're guaranteed regular interest payments and the return of your initial investment. However, bonds aren't risk-free. The two main risks are: 1. Default risk. If a company or government can't pay back the loan, you lose your money. Government bonds are safer, but corporate bonds, especially high-yield ones, can carry more default risk. 2. Interest rate risk. When interest rates go up, bond prices go down. This is because newer bonds will offer better rates, so your older bond might lose value if you sell it before it matures. When investing in bonds, there are a few things you should consider. Credit rating. Look at the issuer's credit rating. Higher-rated bonds, like those from AAA-rated companies, are safer, while lower-rated ones might offer more risk and reward. Interest rates. Pay attention to the current interest rate environment. If rates are expected to rise, bond prices could fall. Maturity. Bonds can have short-term, medium-term, or long-term maturities. Generally, the longer the bond's maturity, the more interest it offers, but also the more interest rate risk you face. Now, what about returns? Bonds tend to offer lower returns than stocks, but they provide more stability. Government bonds, for example, might offer a return of around 2 to 3%, while corporate bonds might offer between 3 to 5%. High-yield bonds, as I mentioned earlier, can offer even higher returns, sometimes over 6 to 8%, but with much higher risk. So how much should you invest in bonds? It really depends on your financial goals and risk tolerance. A good rule of thumb is to have a mix of stocks and bonds, with more bonds as you get older and closer to retirement. Some people invest as little as $1,000 in bonds, but larger investments can provide better returns because of compounding interest. Finally, how do you actually buy bonds? You can buy government bonds directly through Treasury Direct, if you're in the US, or you can buy bonds through a broker. For corporate and municipal bonds, you'll typically need to go through a broker or an online trading platform like Vanguard or Fidelity. Some bonds are also available through bond funds, which spread your investment across multiple bonds for diversification. To sum it up, bonds are a great way to add stability to your investment portfolio. While they may not offer the high returns of stocks, they provide reliable income and can be less volatile. Just remember to consider factors like credit rating, interest rates, and your own financial goals before investing. If you found this video helpful, make sure to give it a thumbs up and share it with anyone interested in learning about bonds.